That's the benefit of that, right? Pointing and I'm on screen share. Okay, there you go. In that order. I practiced this, I promise, and I'm still screwing it up. All right. Can you see my screen now? Or no?
No.
Not yet. Okay, let's try this again. There you go. And then, can you see my slides and the screen? All
Yep.
right. Perfect.
Yes, sir.
Awesome. Well, thank you. All right. Thank you all. Welcome to 21 in 21. And I'll explain what that title means to us a little later. If you were wondering what it was, that's being presented by Boston Trust Realty Group, Boston Trust Commercial, and CoPad. So I'm very excited to have everyone here to basically talk about real estate and basically the home buying process, and more specifically to have Anne Rachelle here with us, who's going to be talking about the pre-approval process. So to begin, my name is Mark May, and I am a realtor with Boston Trust Realty Group. And guess what would you want to know about me? I've been doing this for about 5 years now, and I enjoy it very much. I always tell people that I sometimes enjoy the open houses more than the clients that I'm taking on there. So I can say that I've gotten, my wife and I, we just renovated our apartment, our house, and we literally, the color that we painted our place was inspired from a house that I saw, that I took a client to. So I enjoy this very much, and I love doing real estate. So 21 in 21 in the year 2021 is basically, it's a campaign that we've put together in order to try to really educate folks who are interested in buying a home. Like I had mentioned, so last year in December, we had a session, we were talking about top 5 mortgage programs in Massachusetts. And we realized that there was such a need out there for folks to really to understand the home buying process. There was such a need for people to really understand, especially the qualification process to buy a home. And we figured that, you know what, we'll put together a campaign and try to help folks and try to educate folks on these topics. So today we're having, like I mentioned, Anne Rachelle. She's going to be speaking with us about the process and what she does and what she's looking for when she's trying to qualify somebody to purchase a home. And we later on, in about 2 weeks, we're going to have with us also Delaney Lynch, who is a credit expert, and he's going to talk about, you know, credit. How do you repair your credit? If you're somebody who's interested in purchasing a home and you think that your credit needs a little bit of work, well, please be sure to attend this session. And Delaney Lynch is going to be talking about that. And then we're going to have Ali Managat, who is a real estate attorney, who's really going to talk about the role of an attorney in the buying process. So I don't know, you know, when you're buying real estate, you're signing a bunch of papers. A lot of them, two of which are contracts that you're signing. So you want to know that you're protected. Your interests are protected. And so Ali Managat will talk about what is involved and what his role as an attorney is and how he can protect you in that process. Then we're just not leaving it there. We're going to try to help folks really get their house in order. So we're going to have Andre de Oliveira, who is a financial advisor. So if you're thinking of buying a real estate, buying real estate, and you think that your finances need a little bit of work, So Andre would be your perfect guy. So be sure to sign up for that one for that talk as well. They're all going to be on Tuesdays and about 6:30. So when you signed up for this session, at the bottom, if you scroll down, you'll be able to see these other sessions that are going to be taking place. And then finally, we're going to have Mike Reed, who's a bank manager at a local bank. And he's really going to be talking about, what do homeowners need? What if you're trying to buy real estate, you may have some banking needs. So he's going to be talking about all of that and more. So I'm very excited about this whole series that we've put together. And without further um, details, I forgot that last slide. I also wanted to talk about basically the benefits of home ownership. So I don't know, has anybody heard about the recent news that Marty Walsh had just made? And I hope I'm not stealing your shine here, and
No, it's
if
fine.
you're going to talk about it, but I just wanted to see if people have heard about what Marty Walsh just really released. Anybody is aware? And you want to talk about it quickly?
So he just released a down payment assistant of $5,000 to assist in either the down payment or closing cost. But I did read the article, so
Mhm.
it does require you to bring at least minimum $2,500 out of your own pocket.
Okay. Yeah. So the reason I wanted to I mentioned that is because I just wanted to kind of reinforce the importance of home ownership, right? And that's something that the mayor is recognizes himself, and that he's putting together that program. So I wanted to quickly go over 5 benefits of home ownership, and the first one is it's a forced savings plan, and then you can keep me honest here too, as a banker. But it's a forced savings plan because think about it: you buy a house, you have a $300,000 mortgage, you're paying interest, but you're also paying the principal down as well. So as you're making your monthly payments, it's basically you're forcing yourself to to save money by paying down your principal, because that money eventually is going to be yours. That house is going to be yours, and if you sell it, you can kind of recuperate that money. Another one is basically you're buying like a really expensive asset through leverage. So typically, and then it's going to talk a little bit more about that. You're buying a very expensive asset with very little down most times, right? So that's a great benefit. And then another benefit is really that you're hedging. Trying to let somebody in here. Um, Basically, rent gets more expensive over time, right? But typically, once you have a mortgage, a mortgage, and you have your payments set up, yes, it can go up. Say if taxes go up or if insurance goes up, if you have that in escrow, but typically your mortgage payment should stay the same over time. Um, and then there are the federal and income tax deductions. Federal income tax deductions, your um, interest payments are deductible, and property tax as well are can be deductible. We can be deducted as well. And then lastly, your home is appreciating over time, right? So I don't know if you've been noticing, in Boston at least, home prices have been going through the roof. So later on, I can share with you guys some facts about, especially for single homes in the Middlesex, in the Suffolk, in the Norfolk counties, and basically the big astronomical changes and appreciation that we've seen for those homes. So I wanted to quickly share that with you all before we get started with Anne. And so I do believe this is where I introduce you. All right. So we have Anne. We're going to give her a chance to introduce herself a little bit, and then we'll take it from
Hi guys. So my name is Anne Rachelle Joseph. I work at Cross Country Mortgage, which is a direct lender. So what I do is I help people get pre-approved, and I walk them through the whole approval process to get to closing day. So first thing I do is I what's called a pre-qualification. Um, So there's a difference between pre-qualification and pre-approval. So pre-qualification is when I take a quick glimpse at your documents and your income and everything, and I give you like an estimate of what you would be pre-approved for, like based on a range. And a pre-approval is when I pull credit and I do a full application. So I look at your W-2s, your income taxes, your pay stubs. Um, we run like a very like intense credit report. So for the mortgage company that we have, so we look at your liabilities, liabilities. I know if you guys have any questions about words that I use that you're not clear on, because I use these words every day, but just make sure you ask me. So liabilities would be your debt. So when I say debt, I mean like um, an auto loan, student loans, not like a cable bill or anything like that, like utilities, not like that. So anything that you had to use your credit on would be on your credit report. So that's what's called liabilities. So I hope that's clear. So I based the pre-approval on your income versus your debt. So for example, if you make $5,000 a month and then you have $2,000 worth of monthly payments, so the debt to income, what I'm counting is $3,000. I'm not counting the whole five. So the higher your liabilities, the less your chances. Any questions so far? And how would I see the questions? Is it typed, Mark, or just talking? You're on mute.
I am on mute. You're right.
Yeah.
Um, Give me a second there. Typically, it would be in my little box there. Are
Mm,
folks writing questions, typing questions in? Just
okay.
want to ask that.
Okay, I
So,
see. I'm gonna put that window up there.
there you go. I got it too now.
So that
Yeah,
chat
perfect.
to
Mhm.
everyone. Okay.
Yep.
So so that's basically what it is. So once I see exactly what you're approved for, I issue this letter that is called an approval letter. So whoever you're working with as a realtor, I send it to you and your realtor. And based on that pre-approval, remember it's different from pre-qualification. Based on that pre-approval letter, you can start looking at homes and putting offers on. Um, if you don't know this, but uh, realtors, listing agents, whoever's selling the house will not take your offer seriously without the pre-approval letter. So they have to see that you were approved by a bank. So they won't even look at your offer without a letter. So it's very important that you do that step first. A lot of people go backwards, which is fine. Um, that realtor will send you my way or to a different mortgage lender um, to get that letter first. So the bank is always the first step.
Okay. But and you're saying we can get a pre-approval. What would be then the first step to getting that pre-approval? Like what would
The
we need to get ready? Like what are you looking for?
so I should have sent you the list. I forgot to send you the
That's
list.
okay.
So do you want to type it in as I say it?
No, that's fine. Yeah, I can type it into everybody. Yep.
So the basic list that I need to get started.
Mm-hmm.
First of all, I need the application. The link is always in my signature.
Mm-hmm.
You would apply now, and
Mm-hmm.
then I need an official ID. So it could be driver's license, passport, a copy of your social security card
Mm-hmm.
to make sure there are no limitations. Last 2 years of tax return, but that one is on a need to be so if you're self-employed, I really need your taxes. But for
Why?
example, if because I need to see your Schedule C,
Mm.
because there are no pay stubs, there are no W-2s, it's only a 1099, and I have to see how much um, loss that you declare. So for example, which is, I always run into this problem, if you're self-employed, first of all, you have to be self-employed for at least 2 years for me to even consider you. So when you're self-employed, you have to be careful of the losses that you put in if you're looking to buy a home. So what happens is, if, for example, the person makes $100,000 for the year and they put like a lot of loss, let's say $50,000 worth of loss, I've seen that. And so I'm not looking at 100 anymore. I'm looking at the remaining 50.
Yeah,
So what happens is, they don't want to pay a lot of the
taxes.
return. Yeah, they don't want to owe the IRS too much money, so they jack up the losses. But if you're looking to buy a house, that's you have to do the opposite. So a lot of people screw themselves over like that, and you have to wait, either amend the tax and fix it, or you have to wait the following year. So even if you wait the following year, hopefully it's 2 years later or something, because I look at the average of the 2 years. So that 50 could still hurt you.
Okay.
So last 2 years of tax returns, especially if you're self-employed. If you're not self-employed, I don't really need them. I just look at your W-2s. So last 2 years of W-2s. So it would be 2020 by now, because I've started seeing them in 2019.
Okay.
Okay. Last 2 months of bank statements, so I can verify the funds, at least for the down payment, and to make sure that there's nothing fishy there, because I see like large deposits of cash, and we have to source anything that's way above your income.
Okay. Why is it so important for you to see the bank statement? You said it's because you want to make sure that the person is, you want to know where the cash is coming from.
Yes.
What if it was a gift?
If it's a gift, they would need a gift letter.
Mm-hmm.
So they would need a gift letter from the donor, and I would need to see the donor's bank statements to see where the cash
Oh,
is coming from. So whatever funds you use for this whole process from A to Z, we're sourcing it.
okay. And
So
that's because you have to
see
document
where the
your
money comes from.
cash.
Exactly. We have to document it. So gift letter, you can use a gift. For
Mhm.
the FHA program, you can use the gift for the whole down payment. So if your down payment's like $30,000 and you have a family, it can only be from a family member for FHA.
Okay.
So when I say family member, I don't mean cousin or, second cousin. It has to be close relative. Mom, dad, can be an aunt or an uncle, but it can't be a cousin for some reason. I don't make the rules. So it's funny because it's like you can use an aunt or uncle, but you can't use the aunt's son or anything.
Ah, okay.
Brother, you can use half brother, step sister.
Mhm.
So you can use your spouse as well
Okay.
for a gift. So all we would need is just a gift letter saying that this is a gift. I don't expect the money back. This is not a loan.
Mhm.
And then along with their bank statement, just one bank statement to show where the check came from, the check copy, or if it's just a transfer to see where the funds came from.
Anybody has any questions? Just open it up. Because I have a whole lot of questions myself. I
So,
just
yeah,
want to
I have a,
I just want to hog the whole thing. Yeah. Go ahead.
I kind of have a question. Can you hear me? I
Go
don't
ahead.
know.
Yes, we
Yes.
can hear you.
So about the money in the bank account. So is what if you save cash? Or do you put all your money in the bank account or like I don't know. That's the part I don't
Like
get
the
right there.
money for the down payment?
Yeah. So
Yeah.
you've saved it under
Sorry.
your mattress, in other words.
Yeah, fair to say.
Yeah, that's not good. So if you're looking, if you know you have plans to buy, you should start putting it slowly. Or what you could do, you could just do the deposit. First of all, don't deposit anything higher than $10,000 because the IRS will come for you. Cash. So if it's a check, it can be anything, unlimited, because we can source the check. But if it's cash, what you can do, if you know you have plans to buy in the next 6 months, you can put the money now, Remember, don't put more than 10K. Um, so when I go, so it's like 4 months later, just sourcing the last 2 months. I don't see where you deposit the money.
Okay.
So the problem is when I see it, you know what I mean? If it was a deposit in June, I have to source it. But if it was a deposit in January and I'm looking at June and May statement, I don't see where the deposit came from. When you put that lump sum of money, I don't need to source it because it's already there.
Yep. Yep.
hmm Is the
Uh,
pre-approval process different depending on property type? For instance, single family versus multi. It is. It's different. You actually get a little bit higher, well, a lot more higher with a multifamily because we use the rental income from that property. For example, so if your monthly income is $3,000 and then you're buying a three family, let's say, and then each unit is getting $1,500, I'm using three extra $1,000. Well, times 75 because we have to use a safe number, so we take out 25%. So let's do the math. So that would be $3,000 um in rental income, okay, times 75%. So I'm using 2250 plus your income of $3,000. So I'm really doing the pre-approval process based on 5250. So you get the more units you have in the property, the more I'm able to use because I can use the rental income. Whereas a single family, there's no rental income. I'm just using your income of $3,000. So it kind of gives you like a extra money for each unit to get qualified on,
Good question.
which helps.
Hey, I just had a quick question for you.
Yes.
So, question: so let's say, so me and Nicole, we went through this process maybe like, let's say like 6 months ago, maybe. Does this expire over a certain time, or like for example, like if we didn't do anything like a year, will we have to go through the process again, or is that valid for a certain amount of time?
Well, what I do, because the credit report expires after 4 months,
Okay,
so what I do, I don't like to keep pulling credit over and over. So if you come and say, I'm just looking, I just want to start looking and nothing has changed. I still have my job. Here are the pay stubs. You can send me updated pay stubs to show me that you're making the same money and you're still in your job. And then the bank statement, you have the funds still. So nothing has really changed. No changes in your credit report. So what I'm going to do, I'm just going to issue the approval letter until you find an actual house that you put an offer on. So when you go on the contract, that's when I repull credit. But
got it.
I don't repull credit until you find a house if you already been through the whole process and nothing has changed.
Got you. Thank you.
Great. And I know this question, I'm sure somebody was pondering it, so I'll ask it. What would you say is the minimum credit that you're looking for? Since we're in the topic
So
of credit.
cross country, we go really low. Um, by the way, I don't know if I mentioned this. My NMLS ID is 1686460. Um, so that's my license number. So cross country, we go really low. We go down to 580 for FHA. So during this pandemic, a lot of lenders have changed their requirement because a lot of them used to be 580 as well. But with a lot of people, it's being so uncertain and losing their jobs, I've heard a lot of lenders have jacked it up to like 620 now. But we have remained the same at 580.
Oh, that's good.
Obviously, the higher your credit, the better the rates. But rates are so low right now. Honestly, it doesn't even affect you that much, even
Yeah.
if you're at 580.
So in a way, that opens up the possibility of buying a home to a lot more folks at the
Oh
580
yeah, yeah.
than at the 620. Because, and like I said, our next talk is going to be about credit, so that'll be something that'll probably come up. That's a great that's thanks for that response.
Welcome.
Um, So we just talked about the minimum credit. So you said 580. So that again, that opens it up for a lot of folks. But what are some do's and don'ts that you would say folks would advise folks um, on during if you're trying to get qualified for?
Do's and don'ts. The most important one. So for dues, just keep paying your payments on time. Don't miss any payments because that will affect your credit score. And you might have the 580 and it goes down to 560 and you're no longer eligible. Um, so one second, let me just pull up because I had my do's and don'ts the other day. I forgot to send to you.
That's okay.
I forgot to send a lot of things, huh?
That's no problem. I just have those questions.
Uh,
Take your time.
Second.
Mhm.
There we
So,
go.
look, I know you don't want to
So
go buy a brand new car, right? Or
So
purchase.
that's the don'ts. I was trying to get through the do's. So the do's is like you make sure you complete your application thoroughly. What I see a lot is a lot of people they you should tell me everything. You should be totally transparent so I can know how to handle it. So I'm like on your team. Don't hide anything. So a lot of people have hide the things, and then it gets to underwriting. So underwriting is the person that approves the loan, and then I'm completely blindsided. So make sure you fill out your application completely, and you're totally transparent with me. Um, so the don'ts, the most important part, like you said, don't make any major purchases to affect your credit. Like and it doesn't even have to be major actually. Just don't do anything with your credit, period. I had this lady, she was about to close. It was like 5 days left for her closing, and then she went and opened a furniture furniture store card for like $500, and like her ratio's already like so tight, so $500, and she was denied the loan because the ratios got too high. So now she has furniture but no house. So anything on your credit, please don't do it. And then don't move money around in your accounts. Like I said, after like you're under agreement with your whatever house you're purchasing, don't like I've seen people do this. They do a transfer from like their 401k, which you can use. You can use a 401k, but then they don't provide me the statements, and then I have to go back. And just anything that you're gonna do, just let me know, and I'll teach you how to do it properly. So don't move your money around and don't make any large deposits that you can't explain. We always have to source it. So, like I said, any checks of any amount is fine because we can source that check to whoever gave it to you. So those are the major ones. But the biggest one is just not to do anything on your credit. And then the other major change is for you not to um, do a career change. So the first thing I look for is 2 years of um, work history. So you have to be in the same line of work for at least 2 years with no gaps longer than 30 days. So I'm going to give an example for that. So for example, let's say you're a nurse. Um, you're a nurse and you're working in a hospital. And then, well, no, let me use this one actually. You're a CNA, okay? Um, and then you've been a CNA for a year, and then you got your degree and you became a nurse. So even though you change positions, you're still in the health field. So
Okay.
CNA, you go to nurse, which is fine. I'm still going to use your income because you upgraded. But let's say that you're a nurse and you decide to become like a waitress or something, That's completely different line of work. I can't use that nurse's income to continue it. You would have to have 2 years in the being a waitress for me to even look at your application. So you basically starting over. You need 2 years. So you can.
Okay.
That's why I say in the same line of work. So
Okay.
for example, if you're a school bus driver and then you become a driver for the elderly, you're still a driver. So it's still fine.
So I see a question on there, but before I ask that question, I just wanted to follow up on another thing you said on that same topic about changing jobs. Say you were someone who was doing a job where you get a W-2, right? And then you change a job where you get a 1099, which independent contractor. You can't do that within 2 years, right? You're saying you wouldn't be
No,
able to
you would
do
need
the
2 years in the 1099.
1099. Oh wow, okay.
Hmm.
It's good to know that. Okay,
Because now you're self-employed and you need to
perfect.
show that your business is making money for steady income
Mhm.
for at least 2 years.
Yeah, okay. And that doesn't even matter as far as how much you're able to put down. Say that person was able to put that 20% down or 25.
Doesn't matter.
Doesn't even matter. Okay,
No,
okay. That's good, it's good to
it really doesn't matter. It's
know.
all we need the work history.
Got it. Yeah, it's still hard work history you're looking for. Okay, I'll read
Hmm.
that question for you. Do you do 203K loans? That's the question.
Yes. Hmm.
And how does this loan compare to other FHA loans?
So 203K loans are very complex. We have it's so complex that, a lot of loan officers don't want to do it. I personally don't do it. So what we Cross Country has, which a lot of lenders don't have, we have a special team just for renovation loans. So I'm doing one right now, but it's not really me. It's my loan, but they're taking care of it from A to Z because it's very complex. So what you need to know is, first of all, uh, you can't just go up to a house and say that you're going to do a 203K because you don't like the floors. So if the house is going to pass FHA, the seller and the listing agent most likely will not accept your 203K offer because
Salary
they know it's a very long process. So, and it takes, the a regular FHA loan with the regular loans take up to 30 days to close. A 203K can take up to 60 to 90 days and then you need to get a lot of parties involved, like a general contractor. You need to have a general contractor who gives you the proposal of the work that needs to get done. And like I said, this has to be a property where the seller is telling you that you need a 203K. You can't decide on your own. Um, it needs to be like totally gutted or renovated. So they already know this and they know it's going to take time. So you need a general contractor to do like an estimate for the repairs. And then you need to get a HUD consultant as well, which most of the time we provide, but some cases you need to get it as your own on your own. So the HUD consultant is the one that represents the bank. So whatever work is getting done, so, for example, you know, uh, a month later, you say that you need to get $30,000 released because the windows have been fixed and the floors have been fixed. So the hot consultant has to go there, take pictures of the windows and take pictures of the floors to make sure that was done. And then they tell us, and then we release that 30,000 out of like 200,000 that you have extra. And then the money gets released little by little. So that's how it works. And the rates are a little bit higher for it, and the loan amount is a little bit higher for it. So unless it's absolutely necessary, um, you might not want to go that route. But if you find a house that you really want to renovate, it is possible.
Good. Any more questions on that, on the 203K loans? Because I've come across a lot of buyers who've talked about it, and then like you said, typically the one thing is a lot of times their offers is not as competitive for those reasons that you just mentioned, because the sellers and the listing agents is usually looking for for contractors or cash buyers for these properties. So
Hmm.
I put in a fair number of offers with 203K loans, and again, we were just not competitive enough. And I
Yeah.
think the timeline
It's a
and
tough loan.
what's
If
involved.
you have the patience for it, go
Mhm.
ahead.
Yeah,
Yeah.
and yeah, we're not discouraging anybody from putting it in. I'm just saying
No, no.
it's
I have to be realistic. I'm just trying to be transparent.
yeah.
We're doing one right now, but it's not a purchase. It's a refi. So
Okay.
we're doing a refinancing where he wants to renovate his house. So it's already his house, and
Mhm. So that's
um,
easier. Yep.
it's easier, but it's not shorter. He's going through the same process, but
Mhm.
it's not like a buyer. So I mean, I'm not trying to discourage anybody, but I'm just, like I said, I'm just trying to be transparent. It's a very long process, but if you want to go through it, it's possible.
Yep.
Nothing's possible.
Is it a little bit more costly as well, or because of all that's involved, or would the interest rate be the same?
So the
Typically,
interest rate would be
all
a
else.
little bit higher, not too much, nothing crazy. So for example, if a regular FHA was like 2.3, this would be
Mhm.
like 2.5, not like 5%.
Okay, gotcha. Gotcha.
Yeah, be
Right.
like a little bit higher, nothing too crazy.
Okay. All right. Cool. Any more questions from anyone? I have one. I'm filled with questions today. So while we're on the same topic of interest rates, and you also mentioned yourself that interest rates are at a historically low level. What would how do you go about figuring out what goes into the figuring out how much um, somebody gets for interest? What the interest somebody
So,
gets?
so the interest rate depends on your credit score, and it depends on the county of the property. So I don't usually lock the rate until usually 2 weeks to a week before closing, because first of all, I like to do 15 days. So the lower the days, the lower the rate,
Mhm.
and the cost too. Um, so we base it on the county of the property, and then we based it on your loan program and your credit score.
Okay. Does your down payment have anything to do with it? I was always curious about
Yeah, definitely. The down payment, if you can put as much down as you can, it helps, but it doesn't help as much as you would think.
that. Okay.
So what I always say, if you have extra funds
Hmm.
to spend on, I would, to make a big difference in your mortgage payment, I would put it towards buying down the rate instead of putting more down. Because you put more down, you put $5,000 extra down, it's not gonna make much. It's like $10 off,
Can,
$10 to
can you
$20 off. Hmm.
Now, I was gonna say, can you go a little bit more into buying down the rate? What does that mean exactly? Because I've heard
So
that term. I'm sure other
yeah,
people have questions about that. Hmm.
so buying points. Let's say so there's a neutral rate, the one that you qualify for. So let's
Hmm.
say you qualify with no buy down. So this is like a raw rate of two and a half, 2.5 rate interest rate. If you have an extra, let's say $3,000, you could buy points to lower that rate. So $2,000, let's say you go from 2.5, you have choices. You can go down to 2.25 instead of 2.5, but that 2.25 is going to cost you, let's say, $2,000. So at closing, if your closing cost was going to be $10,000, now this is rolled in, it's going to be 12,000 because you bought down the points. It's because
Okay.
you went from a 2.5 to 2.2, and your mortgage payment went way lower than with the 2.5.
Yeah.
So you have to pay for the buy down.
Yeah. So you would say it would be in somebody's best interest to buy down rates if they can, because like you're
Yes,
saying, over time, if they're paying that loan over,
definitely. If
10,
you
20,
really, if you
30 years.
really want to make a difference in your mortgage payment, like I
Hmm.
said, that extra $2,000, uh, it wouldn't do much for to lower your mortgage payment. It really wouldn't. But you can put that $2,000 in your interest rate buy down, and when you go from 2.5 to 2.2, that's what makes a big difference. Hmm.
So how much? So how much are you? What would you say right now is the best rate that your firm is offering?
Well, I mean, that's a tricky
I
question,
know you
but
don't want to commit to it, right? Everybody gets
yeah,
1.1, 1.5.
no, like I said, because everybody's different. It's strange to shout out rates. Because like I said, it depends on your credit score in the county and your loan program. But the lowest, I can tell you this, the lowest I've locked recently is 1.99, which is super low. I've never seen it. Like in all my years of working, I never seen a 1 point something. So the lowest I've seen is two and a half. But um I've recently locked a 1.99.
Nice.
And their score was like 750.
Oh, not even 800.
No.
Okay. Um, all right. Good. I'll open it up because I think I'm doing all most of the talking. Let's see if folks are asking questions in the chat.
I have another question. Sorry.
Mhm. Hi.
If we just went through like a pre-qualification process with another company, how do we stop working with that company and work with another company? Like, how do we transfer all of our information over? Or do we have to go through the process again?
Well, yeah, because I don't have that other lender's records. So you would just send me the required documents again and then apply again. Did you pull your credit?
Yeah, they pulled our credit
When was that?
last week.
Okay, so that's good because a lot of people don't know that when you're shopping around for a mortgage, you have 14 days. It's a 14-day period to shop around and get your credit pulled. So you can pull as many times as you want within those 14 days of the first credit pull, and that will only count as one inquiry.
Mm.
So you can pull it 100 times. Don't pull it 100 times, but you can pull it 100 times but within 2 weeks of the first credit pull, and then it only counts as one mortgage inquiry
Okay.
because they know that you have the right to shop around.
Yep, it's good. We have another question. Can one start the pre-approval process without a specific home in mind?
Of course, of course. That's most of the people I work with. Um, because as I mentioned, you have to know what you're pre-approved for to even look at homes.
Yeah.
It's like going shopping at Macy's and you have no credit card. You know what I mean? So you need to know how much you have in your pocket to even go to the store. So 99% of the time,
Yeah.
people don't have a specific house in mind.
Yeah. And that's perfectly fine. Even if you come to work with me, typically if you don't have a pre-approval yet, what I'll ask you, hey, what are some of the areas that you're looking at?
Yeah,
That
yeah,
gives you an idea of
definitely.
what price point you might be looking at, based on what your interests are. But I'll
Hmm.
still be interested in working with you and actually starting the conversation to work with you. But like Ann had mentioned, I'll need the pre-approval so I know exactly how much you qualify for before we can actually
Exactly.
see homes.
Yep.
Yeah,
Hmm.
and now, especially with COVID, I'll just make that quick point. Especially with COVID, what I've found is that a lot of listing agents are being very strict about showing homes without verifying that the potential buyer or the person who wants to see the home has a pre-approval, because obviously nobody
They
wants
they
to.
call me all the
Yeah.
time too.
Oh, they do. Okay.
Oh
Yeah.
yeah.
They want to make sure because
Yeah.
they just want to make sure that they're not letting somebody into people's homes with COVID without, that who's not
Just to
ready to.
show like how important the approval letter is, that these listing agents call me. We just got an offer from your client, blah blah blah, for this house. We just want to make sure that they're fully approved, that you looked at through all the documents and they're ready to go, and because we don't want any problems. Um, so I'm like, yeah, definitely, they're ready to go. If they weren't, I wouldn't have issued the letter.
Yeah.
So, and they're like, okay, then we'll talk it over and we'll accept the offer or whatever. But if if you're not pre-approved, first of all, then they have nobody to call, and they're not even looking at your offer.
Yeah.
Just to show like how even when they do have the letter, they still call.
Yeah. Yeah. Any more questions from anyone? Those were some good questions. Quick double check here. Um,
I just put my email. Um, if anybody wants to email me, get more information, they can do so. If they want the list of the documents that I require and the link to my application as well, it's right here.
Perfect. It's good stuff. Awesome. I do have another question for you. Well, how do I know? How does a buyer know how much money to put down? Like, how do you
So,
determine that? Because I know you were saying that sometimes an extra $2,000 doesn't really matter, but how do I know exactly what the sweet spot is, or what's
so
required, I should say?
what's required is based on the loan program
Mhm.
that they're in. So we have FHA. FHA takes 3.5% down. And what's great about FHA is that it's it goes from 1 unit to 4 units. So even if you're buying like a four family, you can put 3.5% down, which there's no other program that offers a down payment so low for multifamilies. So when you go higher than four, that's considered commercial. So for example, conventional loan, the more units for like a single family, you can put 5% down. Then when it goes to two family, depending on the borrower, it's 10%. Then the three, it's 15, and then the four ends up being 20 to 25% down. And FHA just stays at 3.5 for 1 to 4 units. So it's a great program if you're looking to buy your first multifamily property. So what I always recommend is for you to buy um the highest, which is like if it's possible to go to multifamilies instead of a single family. So what the limitations for FHA is that they require for you to live in a property because it's not meant for investors. So what I recommend is if you're for you to buy the multifamily first and then you refi out of it and you get a conventional loan, and then once you're ready to buy another single family, you buy that single family using the FHA again. So you can use it as many times if it makes sense, because most of the time when you buy the single family first, um, and then now you're trying to say that you're buying a three family to go live in because it requires you to live in the property. It has to be a primary residence. So people don't usually go from, living in a single family to go live in a multifamily, and downgrade. So it has to make sense. So you go from the multifamily, then you buy the single, and you use the FHA multiple times. So you don't have to do the 20% down. And then we have conventional loan for single families only. You can put as little as 3% down, but that's like it's for like first time home buyers, and it's limited to single families.
Quickly, a quick hits. What are the benefits of using FHA versus you just mentioned the down payments. That's one,
Mhm.
but in this case, like you said, you can
The
literally
rates.
the rates. It's the rates.
Mhm.
Okay, the rates that you're getting.
So the rates for FHA is really
Mhm.
low. It's much lower than conventional
Mhm.
because, like I said, it's customized for first time home buyers, except for the conventional program that takes the 3%. So that's even lower than the FHA loan.
Okay.
So let's say conventional, just to give you a picture, conventional with the special first time home buyers program that takes 3%, the rate could be 2.1%. And then FHA would be for that same home would be 2.3. And then a regular conventional that takes 5% would probably be 2.7.
Okay. Good.
Oh. Can closing costs be rolled into the loan or do you have to pay at closing? So for refinancing, closing costs can be rolled into the loan, but for purchases, it cannot. So what you can do, um, you can get a seller credit for the purchase. So the way the seller credit works is that, let's say the property is for 300,000, okay, and then you need $10,000 for your closing costs. So you would offer the seller 310,000 with 10 back. So that 10 back is rolled into the loan. It seems like it's a credit from the seller, but it's your own money being rolled into the loan. So you pay off that 10,000 with the principal loan, which is not $10,000 with the 360 days, 30 years fixed. It's like $30 difference in your mortgage. So you don't pay an upfront $10,000 and you pay just $30 extra in your mortgage payment. So just to repeat it, you can't roll it into the loan on your own unless it's a refi. You just have to use it as a seller concession, seller credit. So you offer 310,000, you ask for 10 back, $10,000 back. So the seller, it doesn't matter to them because they're getting the 300,000 that they wanted anyways. So it makes no difference for them. So it just has to get appraised for the 310 for in order for us to use it. Does that help? Does that answer question? So I've done a lot of loans where the person's getting a gift for the down payment. So the closing costs, that the seller credit cannot be used for down payment. It can only go towards the seller towards the closing cost. So I've seen that people get gifts for the down payment and then they get a seller credit and literally nothing comes out of their pocket.
Mm, that's ideal.
Yeah.
Especially if you have to make renovation to the place or
Yeah.
you gotta buy
And
something
I've
new.
even had seller credits, like let's say they give 10 and then we only need like 8,000 of it. I use that extra 2 grand to buy down points.
Mm, okay.
So it can lower your mortgage payment.
Yeah.
So instead of you giving it back, you put it towards the rate. So we can buy down the rate with seller credit as well.
Yeah. Good. Awesome. Um, do you have to be a citizen, a U.S. citizen, to purchase to?
No, you don't have to be. You just have to have a legal status, like a
Mhm.
work permit. I've seen like a lot of work permits expiring last year. You can
Mhm.
provide that. I don't know if you still get it, like the approval notice letter from immigration. We can use that as well. A green card. You don't have to be a U.S. citizen. You just have to be here legally.
Okay. It's good. Um,
Hey, and do you mind explaining? Do you mind diving into closing costs a little bit more? Like, is that just like the down payment, or is that like an additional thing in the
So the
process?
closing cost, it's not your down payment. So your closing cost is your loan fees, your attorney fees, escrow. So escrow, for example, we collect escrow at closing. So we require home insurance for your property. A lot of people can't pay out of pocket for the home insurance. We pay it for up to a year. Okay. So what happens then? Sorry, I'm just distracted by the
oh, I'm
background.
sorry. I'll stop doing that.
No, it's okay. So, and then you have attorney fees, because we do encourage you for you to use an attorney. Like Mark said, you're signing a lot of documents. You don't know what's coming from. We have recording fees, to make sure that when you record the deed, that the property is legally yours. All those fees are called closing costs. And like I said, if you decide to buy down the rate as well, that it counts as closing costs as well.
I got you. Thank you.
Mhm.
Cool. So we're at time actually. I just wanted to be respectful of people's times if you wanted to log off, but I think, and if you're okay with it, we can take a few more questions. Um,
Sure.
um, okay, but it's 7:30, so I just wanted to be respectful of other people if they had other plans and they needed to be there. But I think I have one other uh, question for you. Um, um, what would you say was your top advice for somebody who's looking to purchase a home?
Um, I think I
Or
mentioned
best
it.
advice? Hmm.
Yeah, the best advice is literally do not quit your job if you're looking to purchase. Do not change, your line of work. Don't try to not put anything else on your credit. Don't open your credit, even if it's tempting. And the most important thing is to just pay your payments on time. Um, because trust me, if one late payment could just ruin the whole process. And like I said, don't make any large deposits that you can explain. If you know that you're going to be purchasing in the future, just
Hmm.
just know that I need the most two recent months. So you can do anything up to the 3 months. I don't care what happens because I can't see it. But as long as I see it, it needs to get sourced. I think and just like it's a tough process, but I think it's my clients like they don't really feel it because I take care of everything. um if they don't have a realtor, I work with realtors. I give them a realtor. If they don't have an attorney, I have a go-to attorney that takes care of them really great. um Gives like discounts because I use them a lot, so they don't I call myself a one-stop shop. Even like if you're like self-employed and you have problems on your taxes, I have an accountant here. So anything that's related to the whole process, I have a go-to that can take care of it. So most of the time they don't really lift a finger.
Good, good to know. That's great.
Yeah.
Well,
Yeah.
thank you to everyone who logged on and participated in the first of a series of chats like that we're going to be having with folks who are involved in the home buying process. We're again, our goal here is to educate folks about the home buying process. And if you were looking to purchase and you didn't know anything about the process, again, please be sure to log on. If you know somebody who would
I'm
benefit
sorry,
from
Mark. Can
this.
I just interrupt? I'm so
Oh,
sorry. I just want to make sure I say this because I saw that the other day.
mhm.
Um, this whole process is nothing out of pocket. Like I don't get paid from the borrower. So if if you're doing the process with any other lender and they require an upfront fee, it's very legal.
Yep.
We can't charge any fees. So I get paid by my bank. Nothing. The borrower doesn't have to pay for anything other than maybe a credit report. But no service fee.
Yeah, no, I'm glad you mentioned that. Yes, I think it's quite important for folks to recognize that.
Yeah.
Similar to my role too, I don't get paid until somebody buys or sells something.
Yeah.
I don't
Yeah.
collect anything up front. Um, um, yeah, I'm glad you mentioned that. So. But yeah, like I was saying, yeah, we're if you yourself or someone who's looking to purchase, please reach out to Anne, and she can definitely help you get that going, and reach out to myself, and I can also help you on the buying side. Um, so last chance to ask any questions before we go.
Before we go out into the snow.
Yes, I know. It's terrible out there, man. I literally I didn't clean anything before I came
Yeah.
here.
I sprinkled salt. That was it. Hopefully that helps.
I know, I know. All right. All right, so I'll stop sharing. Again, Ann's information was there. If you registered, you must have left your email address. So we'll go ahead and send you any some of that information that Ann was referring to, as far as like what are the lists of things that you need, some of the do's and don'ts of when you're applying for a mortgage, and then also send my contact information along with hers. And so if you need to reach out to us. Okay.
Yeah, and I know a lot of times like people have questions like after it's over. Like it happens to me. I'm like, oh my God, I forgot to ask this. Like just email me. Don't be afraid to reach out. I will answer once I can. But don't worry, you can ask me as many questions as you want.
All right. That's awesome.
Yeah.
I probably will come up with some questions after.
Brain freeze.
All right. All right, guys. Thank you all. Bye-bye.
Bye.
Bye.
Thank you guys. Bye bye.
Mhm. Oops. I thought I stopped sharing now. Log off.